If I was 25 in Australia today, I would not focus on trying to look successful. I would focus on becoming financially difficult to ignore. Most people at 25 are either spending everything they earn, unsure where to start, or chasing random money advice online. Very few have a simple system. So in this video, I'm going to break down exactly what I would do if I was 25 in Australia right now. Not theory, not hype, just practical steps that compound over time. And the goal is simple: build options early so life gets easier later. The biggest mistake at 25 is trying to figure everything out at once. People jump between crypto trends, side hustles, stock tips, property debates, and lifestyle upgrades. That creates motion, not progress. If I was 25, I would ignore noise and focus on 3 things: income growth, spending control, and consistent investing. That's it. Everything else is secondary. At 25, your biggest asset is not your savings. It's your earning trajectory. If I was starting again, I would ask, what skill increases my income over the next 3 to 5 years? Not what is trendy, not what is easy, but what compounds. Examples are high demand professional skills, technical roles, sales ability, business skills, specialized trades, digital skills with real demand. The goal is simple: increase your income ceiling, not just your income today. Because investing small amounts on a low income helps, but investing meaningful amounts on a growing income is powerful. At 25, lifestyle inflation is the silent killer. You start earning more, then automatically upgrade. Rent, car, food, travel, subscriptions, social spending. And suddenly you're still broke on a higher income. If I was 25, I would deliberately keep my fixed costs low. Not permanently, strategically. Because every dollar not locked into lifestyle is a dollar that can be invested. Flexibility early equals freedom later. This is where most people either start too late or not at all. If I was 25, I would start investing immediately. Not trying to time the market, not waiting for perfect knowledge, just consistent exposure. A simple approach: regular contributions, broad diversified ETFs, long-term horizon, ignore short-term noise. The goal is not to get rich quickly. The goal is to remove time as an enemy, because time is the one advantage you can't buy later. At 25, the amount matters less than the habit. People overestimate starting capital and underestimate consistency. Small contributions done early often outperform large contributions done late, because compounding needs time, not perfection. Most people don't lose because they invest badly. They lose because they start too late or stop too early. If I was 25 in Australia, I would not rush into property. I would treat housing as a strategy decision, not an identity goal. Questions I would ask: does buying reduce my flexibility? Am I stretching too far? Would renting and investing outperform emotionally and financially for now? Am I buying for life stability or social pressure? Sometimes buying makes sense, sometimes it doesn't. But I would not rush it just to get on the ladder. That mindset causes expensive decisions. At 25, there is enormous pressure to look successful. Nice car, nice apartment, frequent travel, expensive lifestyle. But if I was serious about building wealth, I would ignore all of that, because status spending delays financial independence. And most people you compare yourself to are either in debt, supported, or trading future wealth for present image. Don't copy that. The real goal at 25 is not wealth, it's optionality. Optionality means you can change jobs, you can move cities, you can take risks, you can leave bad situations, you can invest more aggressively later. You are not financially trapped. And optionality comes from savings buffer, low fixed costs, income skills, investing base. This is the real freedom most people want but don't define. A lot of people at 25 think, I'll start once I earn more, or I need to learn more first, or I'll invest when I have enough money. That delay is expensive because starting late removes compounding time. If I was 25, I would start imperfectly, then improve while already invested. Action first, optimization second. If I had to simplify everything, first, increase income skill over time. Second, keep lifestyle controlled. Third, invest automatically every week or month. Fourth, avoid high debt unless strategic. Fifth, reinvest everything early. Sixth, review progress once or twice a year. No complexity, no obsession, just repetition. If you follow a simple system for 10 years, your income tends to rise, your investments accumulate, your habits stabilize, your financial stress reduces, and your options increase. Most people underestimate how much changes over a decade. They think in months. Wealth builds in years. If I was 25 in Australia, I would not try to optimize everything. I would focus on building a strong base early, because the difference between people later in life is rarely intelligence. It's timing, consistency, and discipline. Start early, stay consistent, avoid unnecessary pressure, and let time do the heavy lifting. If this video helped, subscribe for realistic Australian finance content with no hype. The goal is simple: make better decisions earlier so life gets easier later. See you in the next one.